Hi guys, welcome to this Moneycontrol live stream. It's a Tuesday morning and the cues coming out of global markets are fairly positive. I'm Nandita Khemka and I'll be talking about all the cues for trade, all the stocks that will be in focus, and of course all your stock related queries will also be taken up with our experts on the show. So if you have any queries, needless to say, keep them coming in on a live feed on YouTube and we'll try and address them in today's show itself. Of course, looking at the GIFT Nifty, hinting at a positive start. But before we move any further, let's take a look at the top headlines at this hour. Record-setting run continues unabated on Wall Street. The Dow hits a new high as investors bet on Donald Trump to win the presidential election after the failed assassination attempt. Fed chairperson Jerome Powell hints at impending rate cuts, says the Fed will not wait till inflation reaches 2% to cut rates. And this, of course, has come as music to the ears for the markets. Asian markets trade mixed, reacting to Fed chairperson Jerome Powell's rate cut comments and a strong handover from Wall Street. The GIFT Nifty is hinting at higher start for the Indian markets. Looks like we are poised to continue our record run as well. Crude prices fall for a second straight day, with the Brent slipping below the $85 a barrel mark as the dollar strengthens. Gold prices meanwhile trade near monthly highs on hopes of rate cuts by the US Federal Reserve. Among key earnings to track today, Bajaj Auto is expected to deliver steady Q1 earnings. Rich product mix and high single-digit volume growth may drive a near 15% jump in top-line growth. All right, just about 9 minutes to go for the opening bell. We will, of course, be watching out for the index to clock in higher levels. Yesterday, of course, we ended at a record high. Didn't really manage to close above 24,600. Nevertheless, we ended just about close to that level. We hit that 24,600 mark for the first time during the session yesterday. The Nifty Bank Index, also ended in the green, recouped most of the intraday losses. So we'll have to watch out for whether or not the Nifty Bank Index manages to hold on to gains, because it's not only the Nifty Financial Services weekly expiry today, the Nifty Bank weekly expiry will also happen today, given the fact that tomorrow is a market holiday. The mid-cap index, continued to outperform. In fact, the outperformance came back after a couple of sessions. We saw the mid-cap index hitting a new high in intraday trade. But the IT pack, that was the star performer of Friday, which saw a 5% up move, came under some bit of profit booking yesterday. So IT was the only pack that ended the day in the red with 0.5% kind of losses, on the index. The PSU banking index was the top gainer yesterday, 3.5% uptick coming in there. Aside of that, if you look at the option queues, the put call ratio climbed to 1.33 vis-a-vis 1.28 levels in the previous session. Talk about stocks that will be in the F&O band today. New addition, Hindustan Copper. Aside of that, quite a few of them that will still remain in F&O band, and those are Aditya Birla Fashion, Chambal Fertilizers, GMR Airports, GNFC, India Cements, Indus Stars, RBL Bank, and stocks that have exited the F&O ban are the likes of Balrampur Chini, Bandhan Bank, IEX and Piramal Enterprises. Fund flows, FIIs continue to be net buyers. They have bought shares worth 2,600 crore rupees or thereabouts in the cash market. A smallish sell figure from DIIs, domestic institutional investors, 330 crore worth of stocks sold in the cash market. But on that note, let's see whether we have our technical analyst, and understand what the texture of the market is looking like for today. Joining us is Nilesh Jain, who's the head AVP Derivative and Technical Research at Centrum Broking. Nilesh, always a pleasure chatting with you. 24,600, 24,635, that's the record level. That's the swing high that we made yesterday. Of course, would you, look at a retest of that level, and the swing high of yesterday, would that serve as a key support level for today?
Morning, Nandita. So yesterday, in fact, as you have rightly pointed out, Nifty scaled to yet another record high of 24,635. And if you look at the major undertone that continues to remain on a positive side, so I won't be surprised ahead of the budget if Nifty scaled to a new milestone of 25,000, because that's the next level that we are eyeing on. So as of now, there could be possibility of some consolidation, but given the kind of run-up that we are seeing in the global market, specifically in the US market, where Dow hit a new record high, Along with that, S&P 500 also hit a new record high there as well. So, given this kind of a positive setup in the global market, I think this run-up is likely to extend further, and we might see this pre-budget rally to extend further towards 24,800 to 25,000. The ideal strategy should be to buy on declines. The immediate support is placed at 24,300, followed by 24,000. That's the 21-day moving average for the Nifty. Even if you look at the weekly expiry data expiring in this truncated week, that shows that 24,500 on the put side has the highest OI concentration. On the call side, call writers are active at 25,000. So that's the new range, 24,500 to 25,000, acting as a support and resistance respectively. The volatility index is very much in the comfort zone, trading below 15. Although yesterday it was up 3%, but I think till the time it trades below 15, it is very much in the comfort zone for the bulls.
Okay, volatility index remaining below 15 offers comfort, but what about the Nifty Bank index? Yesterday we managed to claw back from the day's low when it comes to the Nifty Bank index, and we all saw what happened with the PSU banking index, right? That gained somewhere around 3% or thereabouts. For the Nifty Bank, what kind of a floor would you be watching out for? Do you think the kind of up move we saw yesterday has the legs to sustain today as well? And the PSU banks, would you expect some bit of profit taking there?
So, Nandita, if you look at the Bank Nifty structure so far in July series, Bank Nifty has been underperformer compared to the Nifty index. Nifty gained 2.5%, whereas the Bank Nifty is up merely 0.2%. So, given this kind of a big underperformance compared to the Bank Nifty, I think there could be a patchy rally in the Bank Nifty as well. So, as far as spot levels are concerned, 52,000 is something that Bank Nifty has defended in last 5 consecutive sessions, which is acting as a crucial support zone on the closing basis. So we expect a pullback from here, and on the upside, 52,800, 53,000 are the two immediate levels that we are expecting. A breakout above 53,000 will open the floor towards 53,500 to 54,000. I wouldn't be surprised if Bank Nifty also scaled to a new record high in July series itself. So structure, yes, it looks positive. But within private sector banking space, a few stocks where we have seen some underperformance. Now there could be possibility of some rebound. So counters like Axis Bank, ICICI Bank, HDFC Bank, these are the stocks that are looking positive. And if you look at Nifty PSU banking space, which is looking strong, yesterday we have seen a good breakout. So there may be possibility of a follow-up move on immediate basis. So counters like Canara Bank, State Bank of India, and also Bank of Baroda. So these are the stocks that are looking positive on the chart.
Okay, that's how the entire banking pack is poised on the charts. But I want to get in your thoughts on a SpiceJet. It has reported its financial results after much delay. For Q3, there's a loss, but for the fourth quarter, numbers are pretty good. They have reported a 6-fold jump in their profit growth. Of course, we've seen the stock being fairly active as well, right? Would you expect the stock to make a dash at its 52-week highs of above 70 levels anytime soon?
So that would be a very difficult call to say as of now. But what looks like that it has formed a good base near about 48 levels. So multiple support can be seen at 48 levels, and the structure is constantly it is forming a low top and low bottom formation. So to negate this negative formation, first of all, it needs to break 58 level on the upside, and a breakout above 58 will open upside towards maybe 60 to 65. So immediate support is at 52. So that should be the stop loss for the longs, and upside may extend further towards 60 to 62. And the major trend will turn positive once it sustains well above 58 levels.
Okay, that's the view on a SpiceJet. Want to get in your thoughts on a Geo Financial. Numbers came out yesterday. Profit has grown by 0.6% and revenues are pretty flat on a quarter-on-quarter basis. We also have a query I've spotted on our live feed. Aditya Reddy wants to know what he should be doing with the stock. Should he hold on to it because he has positions at current levels? What are your thoughts on the charts and what should he do?
So it's first of all, it's a good portfolio stock, and given the kind of consolidation that we have seen in past 3 months now, I think it's good time to accumulate. And on the upside, we can expect a follow-up move towards 380 to 400. although it may consolidate further, but overall position target comes around 400 plus. So good 15 to 20% upside is still there. And if at all we see any dip towards 345 to 340, I think that should be used as a buying opportunity, keeping stop loss below 320. 320 is multiple support can be seen at 320, so that should be the stop loss for the long. But yes, I think it's good time to accumulate Geo Finance for upside target of 380 to 400.
All right, a good time to accumulate. That's the call on a Geo Financial. But just about a minute to go for the opening bell. I want to quickly get your thoughts on an AngelOne. Numbers came out yesterday. Profits have seen a 35% jump. Revenues have also seen strong traction, 70% or upwards of 70% growth on a YY basis in revenues. Margins have declined to 33.9 vis-a-vis 39.6 on a YY basis. But of course, the stock came under a fair bit of pressure after the SEBI's regulations on uniform charges, transaction charges. We saw knee-jerk reaction from some of these discount brokerages and brokerage stocks. So is it a good time to buy the stock post earnings?
So Nandita, I think it is better to wait for the stock to give a convincing reversal on the chart. As of now, the stock is in a downtrend, forming a lower top and lower bottom formation. There was a big gap down opening that we saw at 2600 levels near about on 2nd of July. So post then we have witnessed a continuous supply on every pullback. So I think it is better to wait for a strong reversal on the chart. But good part is that it has a very strong support somewhere around 2200. So ideally 2200 should be the stop loss for the long position. If somebody already holding the longs can stay put, pullback can be seen towards 2400 to 2450.
All right, that's the view on an AngelOne, but we have the opening bell there, 24,600. It is a muted start, but nevertheless, we've opened at or above that 24,600 mark. In fact, very close to the all-time high of 24,635 as well. Just want to see what the broader end of the markets are doing. Yesterday, the mid-cap index had also hit a fresh high. Mid-cap index in fine fettle, moving in tandem with the benchmarks. Too early to say, where the outperformance will really come from today. But mid-cap index moving in line with the benchmarks. In terms of sectoral movers, want to see which of the sectors is doing well at open. We have PSU banking lot, 0.3% kind of gain coming in there. Metals are doing well, 0.5% uptick there. IT as well, in fine fettle. FMCG. So barring the private banking pack, the Nifty private banking index, all of the index are trading in the green. The Nifty realty pack was also active yesterday, saw some bit of buying interest after a few sessions of profit booking. Today as well, 0.4% higher for the Nifty realty index. So all in all, it's been a good start, and want to see what the individual movers are looking like this morning. Bharti Airtel, top gainer. Coal India, you have some of the auto names like M&M doing well, SBI extending gains from yesterday. Tata Steel, HUL of course will be selling its Pureit business, the stock among top gainers on the Nifty. Aside of that, BPCL is also another counter that's doing well. I want to see what the losers are, or what's featuring on the losers list today. Dr. Reddy's, that's the top laggard. DV's Lab, so top two losers from on the Nifty is from the Pharma basket. Nestle is another one, L&T, Sun Pharma. So Pharma seeing some bit of pressure today, and some of these auto names like Tata Motors and Hero Moto also feature among the losers, and so do these IT names, LTI, Mindtree and TCS. These are also among the laggards today. So all in all, it's a good start, nothing to complain about. 24,630 on the charts. I want to also pull up a Vedanta and see what that stock is doing, because the QIP has been launched. That was a CNBC TV 18 exclusive, and it has of course been confirmed now. I just want to see what the stock is doing, just about up 0.5% or thereabouts. Vedanta, how is the setup looking like now, Nilesh, within the metal pack? 506, that's the 52-week high. Do you see traction building here?
Right, Nandita. So structure looks positive for Vedanta, and it has been oscillating in a very tight range of 480 to 420. So that was a 60-point trading range for this particular counter. But I think from here we might see some attraction towards 480. So at current level, yes, Vedanta looks positive, can be bought, keeping stop loss below 448 for upside target of 480 plus. So yes, in fact, if you look at the overall Nifty metal index as a whole, given the kind of fall and consolidation that we have seen in the dollar index, I think Nifty metal index likely to do well from a short-term point of view. So within this space, counters like Hindustan Copper, Vedanta, and also Steel Authority, these are the few names that are looking positive on the chart.
Okay, before I come to your picks, how would you play stocks like Tanla Platforms? Yesterday the stock was up 10% or thereabouts. Today as well, no big moves yet, but it's up 0.5% or thereabouts. Do you think if somebody holds positions in Tanla, it's time to take some profit here?
If somebody is already holding the longs, I think one can stay put, keeping a trail stop loss. So trail stop loss is coming around 985, and the stock still has a potential given the kind of the spike that we saw yesterday, which was above 1050. The high that it has made somewhere around 1086. So I think somewhere around 1050 to 1070, that is a good range to book profit. But at current level, one can stay put, keeping stop loss below 985.
Okay, that's a view on Tanla. But before I move on to queries, Nilesh, what would you be recommending for viewers with the next over the next 1 to 2 days?
Right, Nandita. So I have a couple of buy recommendation. So overall, OMC stocks are looking strong on the chart. So BPCL is one particular stock that is looking positive, and it can be bought. We are witnessing some amount of build-up on the long side as well in the morning. So yes, can be bought for upside target of 315, 320, and stop loss should be placed somewhere around 305. So 305 should be the stop loss. 315, 320, and maybe the third target could be 325 for BPCL. So overall, OMC stocks as a whole looks positive on the chart. Apart from that, Kulpal from FMCG space. This is another stock which has a very strong setup. This stock has hit a new record high as well. So it looks positive for 3160 and 3200 target, and stop loss should be placed below 3060.
Okay, let's quickly squeeze in some viewer queries. Then on that note, first one is coming in from Vinod Patange. Wants to know your thoughts on the hotel pack. He's making 60% profit on stocks like Indian Hotels and Chalet Hotel, and he wants to know whether he should book profits or add on dips. What would you advise?
If the view is from a short-term trading point of view, I think any pullback from here should be used as a booking profit opportunity. And if the view is from slightly medium to long term, I think one can stay put, and if at all we see any further dip, that should be used as a buying opportunity. Because see, positionally, all the hotel stocks has a very positive setup. Specifically for Indian Hotel, it has a very strong support near about 540, 550. So if any dip comes near about 580 to 560, that can be used as an opportunity to average and add further. But that's the positional target. There's a positional view for a target price of 660 to 700. But on immediate basis, the structure is looking slightly sort of consolidation. So any pullback might get sold into. So better to take a view from slightly longer term point of view and add on declines.
Okay, that's the view. I hope that answers your query. The next query is coming in from Satya CK, and he wants to know your thoughts on a Kaveri Seeds. Is it the best time to start buying into the stock? The stock off late has fizzled out a bit, but in the last 3 months, if you see from April 18th, the stock has gained over 40%. Should one use the dips that have come by in the last 1 month or the last 1 week as a buying opportunity?
So Nandita, it has a very good setup. If you just pull up, a chart from 2015, it has given almost a 9-year consolidation breakout. So a big rounding bottom has formed on a monthly time frame chart. So from 2015, the stock has surpassed that level for the first time, and the major resistance was placed at 910. So that will act as immediate support now. The structure looks strong, and any dip, yes, definitely can be used as a buying opportunity, keeping in the mind that it may take 1.5 year time to move towards 1500 or maybe 1800. So that's the positional target. On immediate basis, short-term target comes around 1050 to 1100. The stop loss should be placed below 910.
Okay, that's the view on a Kaveri Seeds. The setup is looking positive. Hope that answers your query, Satya. The next query is on a PTC Financial. I spotted that on our feed. Ashutosh Namdev wants your opinion on PTC Financial Services. He wants to invest for 1 to 1.5 years. Is it a good time for holding it for at least 1 year? Should he invest in it? But the stock has seen good traction in the last 1 week itself. I think it's rallied 10%. Is it a good time to get in? And if yes, any targets he should keep in mind with a 1 year time horizon?
I think PTC India, correct me if I'm not wrong, it is trading at 226. Is it PTC India you're talking about?
The India Financial, which is trading at 56 rupees 45 paise at the current juncture.
Okay. So I'm not able to find this particular counter. I think on my chart it is showing somewhere around 226. So let me just figure it out.
Okay, no worries. We'll come back to it. But what about technology names? A couple of queries coming in on TCS and some of the other technology names. Yesterday, we saw some bit of profit taking, and today as well, the likes of TCS, seeing some bit of red on the screen. Would you advise looking at it now that earnings are out of the way? Do you see, or are the charts suggesting more upside from here?
Right, Nandita. So Nifty IT index, where we have seen a lot of underperformance in past few months now. So finally, this July series, the IT index have done quite well. The numbers are out of the way for TCS. The structure still looks strong, and it has a potential to move towards 4300 to 4500. In fact, a majority of the IT counters are showing strength. Specifically from the mid and small cap IT names, counters like Coforge, LTTS, LTI. In fact, all these stocks are looking positive, and also Birlasoft. So yes, any meaningful correction can be used as a buying opportunity in all IT names that we have just highlighted. And since the markets are at elevated level, the focus is certainly shifting toward defensive. So Nifty IT, Pharma, and FMCG, these are the sectors to be watched out for.
Okay, these are some of the pockets to watch out for. Just got one query on Equitas Small Finance Bank. This one is coming in from Karthikeya Singh. He wants to know whether one should buy at current levels or not. Your thoughts? It's under 100 rupees. Should one look at buying it for the short term with a 100 rupee kind of target on the upside?
So purely from a technical point of view, the stock has a very strong support of triple bottom that is placed at 88. So yes, after a recent correction, the risk and reward is looking favorable. One can take a contra bet, but keep a strict stop loss below 88. It may witness some pullback towards 95 to 100. I think that should be used as a exit from this particular stock. So it has a very tight range. Keep a stop loss below 88. And one may take a contra bet for 95 to 98 kind of target on the upside.
Okay, that's the view on Equitas Small Finance. Just got a query on a Coal India as well. Kush wants to know your thoughts on how one should navigate this one. Coal India is close to its 52-week highs. It's holding on to the 500 level. Are you expecting higher highs here?
Right, Nita. So this particular counter has been in a secular uptrend from past couple of months, couple of years now, and it has a good dividend yield as well. So yes, the structure is still looking strong, and it may test its previous record high of somewhere around 522 to 525, and positional target comes around 550. So yes, at current level, Coal India can be added, keeping stop loss below 480. And immediate target comes around 520 and positional target comes around 550.
Okay, and what about PFC REC? How should one go about it? Because it saw a good run, and I think post that it came under some bit of profit booking. But people who already have positions, should they book some profits at least?
So if somebody is already holding the long position, I think it's a good time to good idea to keep booking profit at the high level. But the kind of run-up that we have seen, there could be possibility of some retracement. If somebody is looking to make a fresh entry, I would say whether better to wait for some dip towards 525, 500. That can be again a good opportunity to buy and get into this particular counter. But if somebody is already holding the long, I think at least book partial profit in the range of 560 to 575. So that's the kind of range where we might see some distribution as well. But positionally, from 6 to 8 months kind of time frame, the stock still has a potential to move towards 600 kind of levels on the upside. So better wait for some meaningful correction for fresh entry.
Okay, wait for a meaningful correction for fresh entry in REC and PFC. But last query really on Timken India. This one is coming in from Alex. Wants to know whether he should average at current levels. The stock has been in a downtrend, last 5 sessions, last 1 month as well, 15% downtick. Is it a good time to average the stock?
So given the kind of recent correction that we have seen from the levels of 4,800 to almost 4,000, so almost roughly around 20% correction, and I would say retracement has already been seen. So at current level, I would say if somebody wants to take a contra bet, first of all, keep a strict stop loss at 3,800. That is a very strong support. If stock breaches the same, then there could be possibility of a further selling pressure towards 3,600 or maybe 3,400. So ideally 3,800 should be the stop loss. One can take a contra bet at current level. And if somebody need a conviction, want a conviction reversal, that will come above 4,200 because the stock is constantly forming a lower top and low bottom formation. So either one can take a contra bet at current level, keep a stop loss below 3,800, or rather wait for a breakout or reversal which will come above 4,200.
Okay, that's the view on a Timken India. With that, I'm afraid we are running a little short on time, and this wraps up our query segment for today. But Nilesh, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure chatting with you.
Thank you, Nandita.
Well, on that note, let's bring on board our next guest for today. Joining me, Sushant Bhansali, who's the CEO of Ambit Asset Management. Sushant, great to have you on the show. First of all, what a phenomenal market it has been. We've seen a 20% gain or returns on the index in the last 1 year. The thought that comes to your mind right now is, should you chase double returns or 3x returns, or should you just look at protecting the kind of gains you've already made in the market? How should one navigate?
Yeah, no, definitely not just I think last 1 year, but last 4 years now. Post the COVID lows, market has been on the upswing in a single direction, and time to be cautious to protect the returns, whether it was skill or whether it was luck or a combination of both. And now is the time, I would say, where the skills will come to play to protect whatever gains you have made, and play wisely, play safe would be the mantra from here on.
Okay, so where should one really look at right now in terms of quality? Because everything is so expensive. If somebody is looking to rotate out of a few sectors and move into some, which are the candidates that should be looked at?
So there are many sectors, I would say, where probably while index is at lifetime high, around that there are many sectors which are not there, be it private banks, be it IT services, be it probably a bit of pharma and chemicals, FMCG. So there are pockets in the market which are not necessarily trading at the lifetime high valuations, while there are many which are. So one should concentrate where the value lies, and at the same time also look at what are the reasons behind not being at the high valuations. And if the earnings are there and it's just market perception or probably not being in trend being the reason, then one should definitely build positions and rotate to those sectors and stocks.
Right, you mentioned pharma. How worried should one be on the US FDA action on pharma names? Sun's Dadra unit, Cipla's Goa unit, all of them have been grappling with US FDA issues. As one turns to defensives, how big an overhang can this regulatory setup be for some of these pharma companies?
That's part and parcel of the game for the pharma companies. I think anything you do has to be audited, be it your accounts, be it your facilities. Everything gets audited at points of time, and there will be strict actions for non-compliances definitely. So one should not, I would say, get swayed by it, that that will lead to value destruction. I think it's a big game for pharma promoters also to lose. So they will definitely come out unscratched in most of the instances. And look at how I think the FDA action between 2013-14 to 2017-18 and how it is now. I think it's relatively much lesser nowadays compared to those years, because I think lots of developments have taken place. People have been complying much more seriously. There will be occasional lapses and which will get corrected. The bigger picture, I would say, on that side is that you look at from a US perspective, the pharma stocks, the inventory has been running quite low, and there is rather shortage than excessive supply. And thereby, I would say that the regulatory results, I think, also will be much more conducive, because they will also be under pressure to have the inventory back in line at the earliest.
Okay, before I talk about earning season in particular, want to ask you your thoughts on the PSU universe. It's a large runway, right? You have defense, you have shipbuilding, a lot of PSU banks. So, the rally hasn't really been derailed as was being feared after the election verdict. So within this space, for defense companies in particular, do you think all the good news around ordering activity, is already in the price, or do you see more runway for growth? And if people, or if somebody has missed out on this rally, do you think it's too late to now board the bus?
Definitely, I think the valuation catch-ups have already taken place. So it will be only earnings which will matter. And if one is already invested, then probably can ride some more time probably, and look at the earnings being playing out. And if it doesn't play out, then get out. But somebody who is, I would say, missed the bus, probably the bus has gone too far. So stay away from such high valuations, not supported by earnings. And it's not, I would say, that same thing for all the stocks. For companies who are delivering earning growth consistently and their order book is rising, definitely there is more money to be made. But one cannot take a blanket approach toward all the stocks in any sector.
Okay. In terms of earnings season, would you, looking at the IT earnings that have come out so far, do you think the downgrade cycle is, is over now? And is there any chance of a P re-rating?
Hopefully, yes, I would say that given that earnings seems to be in line or probably slightly better than expectations of most of the analysts on the street, there is positive momentum building on the sector. The sector, as I put down, is not trading at lifetime high valuation. So there is a valuation catch-up which is possible, because in this market, when there are so many sectors and companies which are trading at those high multiples, sector rotation will take place. The flows in mutual funds have not stopped, and they will be keen to put more money behind companies which are lower on the valuation range from a historical perspective, for sure.
All right. Last question really, Sushant. We just have like 1 week to go for the union budget. I want to understand what's on your wish list. What would you like the FM to do?
I would say continue the fiscal prudence, and probably that's the most likely scenario building by everyone in the place. So no disappointment there. Second, don't end up doing something which can disturb the market sentiment. Which might not necessarily do anything large to the government coffers, but can kill the market mood. I think just saving grace from that should be good enough. I think otherwise the budgets have been quite wonderful for last many years in terms of capex, in terms of probably spend. There is some bit of rural spending which we are expecting, and some populist measures at the bottom of the pyramid. Hopefully that should lead to a bit more of consumption at the rural side of the economy, and probably that should get a few sectors which are not yet delivering the last couple of years to deliver now.
All right, Sushant, we'll leave it at there. I'm afraid we're running out of time, but it was a pleasure interacting with you, and I look forward to more chats with you post-budget as well.
Thank you.
Thank you. Well, with that, of course, the markets, just want to point out on the Nifty, we hit a fresh high of 24,650 today as well. So the record-setting spree continues. The mid-cap index also holding firm. The bank Nifty is also in the green, and most of the sectors are trading in the green as we speak. In terms of movers, Adani Group of stocks, Adani Enterprises doing well. I think it's among the top Nifty gainers. Bharti Airtel, that's the top one, 2% gains. Coal India also active, 1.5%. So some of these PSU names continue their run. BPCL, Tata Steel from the metal pack, HUL, HDFC Life. So yeah, I mean quite a few gainers. But if you look at the advance decline ratio, strength there almost 3:1. That's the kind of advance decline ratio on the NSE. But of course, with that, we've come to the end of this edition of Opening Bell. Of course, we're leaving the markets in good stead. Hope that this trend continues throughout the day, and I'll be catching you at 3:30 p.m. on Closing Bell with my colleague Yatin again. So don't forget to tune in for that. But for now, it's a goodbye from me. Have a good trading day, and stay tuned to Moneycontrol for all your other news and updates.